Hey, and welcome back to Stock Talk with Eric Anthony. Happy Monday. I'm not going to try to take up too much time today for today's video. Today we're going to review earnings from both Palantir and Desktop Metal, the good and the bad. And we'll also get into some big news that came out of ALPP. So let's start there. Alpine 4 subsidiaries ElecJet and RCA Commercial released POWERABLE, a new solid-state battery product line. Alpine 4 Holdings, a leading operator and owner of small market businesses, announced today that its subsidiaries ElecJet and RCA Commercial have created a new commercial brand of products named POWERABLE. Utilizing the incredible power of the AX class of solid-state batteries, POWERABLE has tailored solutions for many OEMs, including RV, marine, power generation, industries, and any other battery applications in need of higher energy density with a more robust power solution than what current lithium-ion and LiPo batteries can provide. With ElecJet's current overseas batteries manufacturing capabilities to produce over 160,000 AX class cells per month, POWERABLE has the ability to move into its market years ahead of their competition. And if you want to learn more about POWERABLE and check out the new website, the link will be in the description as always. This is what Kent Wilson had to say about the recent announcement. When we acquired ElecJet and RCA Commercial in late 2021, I laid out a vision to the management teams of these two companies to develop power solutions for industries that could yield high growth and were currently underserved by the competition. Their hard work culminated in the creation of POWERABLE. The systems developed by this joint team are not only powered by the incredible AX class of solid-state batteries, but are also packed with state-of-the-art electronics and battery management systems, which are being developed by another Alpine 4 subsidiary, QCA, also known as Quality Circuit Assembly. And don't forget, that new plant will be being built and should be all done by end of Q1 2023, so look out for that. Two segments POWERABLE is initially targeting are RV and marine OEMs, and their new and aftermarket sales. Together, these two industries represent a total market opportunity of over $5.5 billion, and POWERABLE will be the first company to offer solid-state battery solutions to their customer base. Sam Gong, president of ElecJet, commented, "The collaboration between ElecJet and RCA Commercial has been unbelievably rewarding. In just 6 short months, ElecJet and RCA Commercial have developed and created these new solid-state battery-powered solutions, powered by ElecJet's AX class of batteries that possess energy density of 270 Wh/kg, 4C charging, 7C continuous discharging, and industry-leading safety features. POWERABLE and RCA have a clear competitive advantage over the competition. These cells will be predominantly produced in the United States, just like we had mentioned. The AX03 will increase the energy density of the AX class of batteries by 34% to a staggering 360 Wh/kg of energy density. The combination of our quick charging, energy density, and safety features make POWERABLE a cut above the rest. With the strength of RCA's distribution channels, POWERABLE is poised to capture market share." Okay, so that kind of sums up what the announcement was from ALPP. Pretty exciting. What this kind of reminds me of is, if any of you guys remember, is back in, I believe it was like June of last year. I have to double check. I'll put the associating slide probably while I'm talking right now. But it reminds me of when Vayu and Impossible Aerospace, when Alpine had combined those two forces, and now we have Vayu Aerospace. You know, honestly, it's just kind of cool to see all these things headed in the right direction. And it's neat to see how Alpine uses their DSF model and combines the liking of the correct companies together while still able to bring in other subsidiaries such as QCA to be one of the main manufacturers and facilitators of some of this new tech that seems to be cutting edge and that we are only scratching the surface of. For any of you guys out there, we also have the new bill that was passed today that should affect the EV market, with about $7,500 going to anyone who makes the purchase of an EV in the space. But one thing you want to keep in mind, no car that's out right now will qualify for that. And so keep that in mind, because maybe something like an SSB, also known as solid state battery, might be something that can push a lot of companies over the edge to try to attract this attention and hopefully attract new contracts for ALPP to help facilitate, and especially since they seem to be well ahead of any of the competition out there. Really quick, if you guys are following me on Twitter, I posted this, I believe it was yesterday or the day before, but I want to bring this to you guys' attention if you don't. These are some pretty exciting things regarding institutional ownership of ALPP. Over the past month, we've had just north of 20 or, about 24 new positions that have been, or new listings that we can see. We had groups such as the Cutler Group close their position, completely and close that put position. We finally got word on how many shares AE Wealth Management ended up with, which is just north of 150,000 shares. We found out that Fidelity reduced its position by half in some of its index funds. And we also found out that the Califree Advisory had a big buy of over $600,000 into ALPP. And if any of you guys are wondering, right now institutional ownership is just under 8% for ALPP. So kind of keep that in mind. We have companies like Apple, Coca-Cola, Chipotle. They have institutional ownership of over 90%. So again, we're still pretty low. So I like to kind of keep that in mind, try to manage my expectations as a long-term investor, and just kind of allows me to remember that the stock can still be manipulated because of how much of the float is still out there that isn't held by institutional ownership. All right, well, that's it for ALPP. Let's move into exciting news regarding Desktop Metal. Let's start here. Check out this big buy, this nice print of Desktop Metal with just about 480,000 shares for the amount of $1.2 million came in at the price of $2.62. And that was just about 30 minutes ago, right before the bell. To me, that means maybe we got some good numbers. So let's hop into how they performed today with the earnings that just came out. Desktop Metal announces its second quarter 2022 financial results. They had a record revenue of $57.7 million, up 204% from its second quarter of 2021, and an increase of 32% sequentially from the first quarter of 2022. GAAP gross margin of 14.6% and a non-GAAP gross margin of 26.7%, increasing over 170 basis points from second quarter 2021. They also announced strategic integration and cost optimization initiative to accelerate AM 2.0 growth, support path to profitability, and drive value to shareholders. Now that part right there is huge, the path to profitability. If you guys have been following Desktop Metal, they've been, one of the pioneers in the AM industry, but not only that, a lot of their competition out there, they've just scooped it all up, bought their competition outright. So it's very exciting to see and hear the word profitability, because from my standpoint, I always thought, hey, the more acquisitions you do, I think that's great. I think it's always fantastic to see a company reinvest in itself and not worry so much about the short term, but having the long term as the end game. With that being said, it does cost money to make these acquisitions, and I'm pretty sure it costs money to make sure that you can support the labor costs that comes from each of these companies that they have purchased over time. If you guys want to know any of these companies, check out my previous videos. You have the money sign, DM, and you can type in Erik Anthony, and you'll see some of these great acquisitions that have happened over the past few months and the past year. But anyway, let's get back to some of these other highlights. They also unveiled Freefoam, a revolutionary expandable 3D printable resin design for volume production of foam parts, and they reaffirmed the full year 2022 guidance of approximately $260 million for revenue, representing 131% growth from 2021. And an approximately $90 million for adjusted EBITDA. And now again, I apologize if I mispronounce some words, but it is what it is. Anyway, that's a quick update on Desktop Metal. Let's see how the market has responded to this news in just some short time. Today, Desktop Metal was up just under 8% at $2.59. At the time of this recording, it was up to about $2.64, which is up an additional 1.73%. As a long-term investor, I think this is all great news. And I'm pretty excited to finally hear some positive things with some of the companies that we follow here on the channel. So again, it's just the way it goes. Sometimes we hear some good things, sometimes we hear some bad things. And speaking of good and bad, let's move into Palantir, because the numbers came out, but unfortunately, Not everything goes up. No pun intended. All right, well, let's get into Palantir. So let's just start out with the good. Let's just start out with the bad. So right out the jump, the numbers didn't come in the way analysts expected. So as you can imagine, there was about a 15% drop. I'm gonna get into some of the highlights and some of the lowlights that you wanna take into consideration as a long-term investor in Palantir. As you might know, I have a little bit of a bias towards the positive sides for Palantir, just forewarning. But after I read these numbers and read some of the things that caught my attention out online today, whether it was from news articles, the charts, there's actually a lot of good here, especially with commercial growth. So let's start there and then we'll work our way down. The company on Monday projected sales of $474 million to $475 million in the current quarter, which would mark growth of up to 21% from a year earlier. That would be the slowest growth rate since the company made its public market debut in 2020. Analysts had projected sales of $499.7 million for the current quarter, according to FactSet. Now let's stop right there. The company right now, their misses are because they didn't hit $500 million in sales. Just kind of keep that in mind. $500 million. They're not trying to hit $1 million here or getting a couple thousand. This company is knocking on the door of doing multi-billion-dollar quarters on a consistent basis. So when you hear all this, just try to take that in consideration, how much they've grown. One thing I do want to bring to you guys' attention, and I'll probably review it in the next few slides, is that some of the things that hurt the stock is it didn't outpace its growth in that capacity. When it comes to their government contracts, some things are slowed down in the back end that sometimes we don't get to fully understand why or how. But as Alex Karp, CEO, did mention today, just because some things are slowed down with some of these contracts doesn't mean that the contracts have expired or they no longer exist. So that, I think, is something to really keep in mind, because once the value of those contracts come into fruition, I think things will definitely turn not only for the company, but the share price, as many of you guys are concerned about being a long-term investor. Another thing that you guys want to keep in mind is that it also missed on some EPS. So we'll get into that right now. For the full year, Palantir expects revenue of $1.9 billion to $1.902 billion, below Wall Street's expectation for $1.96 billion. The company also guided for adjusted operating income of $341 million to $343 million. Palantir said the guidance assumes the company won't win any new major U.S. government awards this year. And if you guys remember, they're still waiting to hear about the NHS government contract that is just north of $300 million, and we won't find that out until September. So it's always nice to tame expectations when you get guidance, because they're acting as if they're not even gonna get it. The guidance would also mark sales growth of up to 23% over the 2021 sales, but below Palantir's long-term guidance for at least 30% annual revenue growth. The view came as Palantir reported that sales in the second quarter rose 26% to $473 million, beating analysts' expectations of $465.8 million. So okay, right there, we got a little bit of a win, right? But not everything's silver and gold. The company also saw its loss widen to $179.3 million, or 9 cents a share, from the $138.6 million or 7 cents a share that it was before. Some things that you want to keep in mind that Palantir brought up today. A related development is that we are seeing former customers, including some of the world's largest transportation, banking, and retail enterprises, return to our platforms in increasing numbers after periods of experimentation with other data integration and analytical platforms and approaches. These customers are returning because they have tried other options and those options have failed, and the product has brought them back. Palantir's customer count increased to 304 from 169 a year ago. The United States business alone generated more than $1 billion on a trailing 12-month basis, representing a 42% growth. Here's another highlight from today's numbers. The company's commercial business, particularly in the United States, was one of the few bright spots during an otherwise bleak quarter. Global commercial revenue increased 46% to about $210 million in the second quarter. And just like I had mentioned, check out this chart right here. The total customer count grew 86% over the year. they added 40 net new customers in Q1 2022, with total customers up 17% quarter over quarter. They were trading just about around $10 today. It was down 15%. To be honest with you, I didn't check after hours activity. With Palantir, one of the things that have kind of been holding it back is how it can increase its customer base outside of what it does with its government contracts. And now we're seeing some pretty good growth there, which is very exciting. And now on the flip side, we're hearing that some of the things that are stagnant are things that are basically things that have to deal with government contracts. So as a long-term investor, I'm not really too worried about this. I'm not gonna lie, I'm not gonna be one of those people that tell you, oh my God, I have all the time in the world, I'm just gonna sit here and wait, and I really hope that my investment just does what it does and I don't really care. That's not true, but I do consider myself a long-term investor. 3 to 5 years, I do foresee that as all these things continue to manifest and come into fruition, as these these returning customers start developing long-term contracts instead of just kind of the quote-unquote trials that they had been doing, I do think that will translate into some great sales and ultimately bring us back to our revenue goals that have been set, not only from the market, but as well as from the CEO. And one other thing you guys want to keep in mind, the CEO, Alex Karp's goal for profitability, another key word, especially for companies that continue to invest in itself and not really worry by the day-to-day of the share price, is that they expect profitability around 2025. So just imagine, we have a company right now that is doing just under $2 billion in revenue and they're still not even profitable. But on the flip side, another thing you guys want to keep in mind is that Palantir has done a lot of investment into SPAC businesses. And if any of you guys have been watching the market, you guys know that SPACs have taken a beating over the past year and a half, almost since February 2021, safe to say. So, I'll put the link below so you guys can take a deeper dive into what they said today in their earnings report and just the financial statements. But you will see that the SPAC investments are definitely hindering a lot of growth when it comes to cash on hand and how they use their cash. Another thing you guys want to keep in mind about Palantir is that just recently they revealed that they want to increase their workspace by 25%. So labor will be, they're on the hiring spree with, I don't know if it's going to be engineers or sales. You guys can check more out in the link below to get more information on that. But these are just some things to kind of keep in mind, some things that I keep in mind as a long-term investor. But again, even though we didn't miss, or we had a little bit of a miss there, I think the writing on the wall is still all good things as a long-term investor for Palantir. But anyway, that's just my take on how I viewed Palantir, the news that we got from Desktop Metal and ALPP. By the way, if you guys are watching this, let me know in the comments below some questions you may have for the CEO of Desktop Metal, as I'm going to try my very best to see if we can get him on and maybe go into a little more detail regarding some of these latest acquisitions, what he has planned. If any of you guys have been following him or following me online on Twitter, you guys will know that he has a couple investor conferences coming up. So it'd be fascinating to try to get some insight on what he's presenting. And maybe, who knows, maybe we get him on, we can get a little more insight or a little more idea of what they have in development and what else they have growing, especially with the foam. The foam, their foam technology is pretty fascinating to me. So just want to throw that out there. We don't know where it goes. So, maybe we look back at this video and we're like, wow, that was dumb. Or maybe we'll look back and be like, damn, it really came true. Who knows? But like always, thank you so much for checking in with Stock Talk with Erik Anthony, and I'll see you mañana.